Hello folks, I'm L.A. Little and this is your daily TA wrap. We take a look at these markets and we do it from a neoclassical perspective, asking ourselves each day, what happened today? And what does it tell us about tomorrow? I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. It was a breakout day. NASDAQ, INDX, Russell, over the highs, big push. If you look at it purely from the technical perspective, there's nothing wrong with it. It hasn't been anything wrong with it for months. One little correction, takeaway bar yesterday, back the other way. What can I say? I mean, that is the scenario here, right? And if we look at this guy, I had the sectors up. I was looking at the sectors. You know, the big 3 sectors in the S&P 500, technology, financials, and energy. Energy keeps dragging. These two, this was a question mark, financials. They went up, pushed the high today, got over it. XLK just pulls away, right? Gaps up over the highs, going on gangbusters. The SOX, the SMHs, still strong. That's 3 days in a row. Intel reports tomorrow night. That big move in the semis was based on upgrades in Intel. And if we look at a chart of Intel, Intel itself is having a tougher time here. So not a tough time, it's just that it had a bad candle today. So you got the big spike up, right? Then you get another spike up today and it finishes at the bottom of the candle. That's profit taking. That's profit taking into what they expect that number to be. I think the semis have made the run here short term, but that's what's happening with Intel and with the chip sector. If I look over at the Dow was gaining ground today, coming back. JP Morgan had a big day. The financials had a big day. Let's go look at the ending numbers real quick, and then let's zero in on what's happening here. So Dow Jones tacks on another 108 points, 16,481, 16,482 is the close. The S&P's 9.5 more, 1848. They actually clipped the prior high, closed underneath it. We'll look at that. So that's a test failure at the highs. But folks, they're gonna go after it again, and that's because of the strength over here in the composite. 31, almost 32 higher, 42, 15. We'll see here on the charts how those just pulled away. The NDX 30, always 29 higher, 3609, almost 3610. And all these 0.5% or more, right? The Dow was well, actually the Dow wasn't the big winner. The composite itself was. We have some structures in place, that ABCD structures. We probably should talk about S&P, for example, another 40 points higher. So let's pop into those and into these and see what we have. So let me make sure we're centered here. Yeah, here we go. All right, so let's take a look at the NASDAQ, or actually let's start with the S&P. So the S&P, you know, today we go up. The high is 1849.44. We go to 1850.84. We close at 1848.38. That's a test failure at the highs, right? But it only failed on one of 2 counts, and you're always looking at both. It failed on price. In other words, it got over it, back under it, closed underneath it, right? So that's a failure on price. But you can see the volumes here, not even close, because that high was made back during the Christmas week, right towards the end of it. Matter of fact, the last day of the year. And we had no volume. We're pushing up there with volume. So volume comparisons, more volume, it's probably going to attack it again. And even if it wasn't that case here, it would probably attack it again anyway, just as a result of the other indexes totally breaking out. Those ABCD structures I was talking about, you know, you have an A to a B point that pulls back into here, and then you got a continuation, right? That's another 40 points to the upside if in fact this thing wants to make the run, right? Another 40 points, big numbers to the upside if in fact this thing breaks out and legs higher. That's the S&Ps. The other piece of that on the listed side is the Dow Jones, and let's go to it next. And then we'll come back to the strongest ones. Highs way up there. This is lagging. The way this has worked previously in almost all the cases before is whatever the lagging index was, the rest of them would either push higher and continue to push higher or push higher and hang while that one caught up. That kind of looks like the whole same scenario again. That high is 16,588. We're at 16,481. It's another 100 points higher. For it to get up there and break its higher, at least test that high, probably get over it. If you remember back in like, what was it, end of August, this was the exact same scenario with the Dow was lagging. Everything else had made new highs. And it was waiting. All the others were waiting. And as soon as the Dow came up there and tested it, they all fell apart. And it was kind of fascinating actually, but it's kind of the same setup going on here. We'll kind of see, we'll just have to monitor it and see if that's what's going to happen. If we go to the stronger ones, let's look at the NASDAQ first. Now the NASDAQ gapped away, right? It never was able to put a swing point high on any of these because it never could go 6 bars without getting over it again. So you don't really have a swing point high, but you definitely have a gap away today, right? Gaps away. Now, what it should do, if it's going to, you know, if the strength is really there, and if the buyers feel comfortable, you know, with this whole idea. I mean, think about what's happening when you get a gap away. Buyers are coming in. They're buying at higher and higher prices. Right? Prices that haven't been seen before. Well, I mean, you know, many years back, but certainly not anytime soon. You've got to have conviction to do that. In other words, you've got to really believe they're going to keep going. Or why would you start plowing your money into it? We didn't get an expansion of volume per se, right? Volume's actually a little bit lower than that one down bar here. But, you know, it's right in the range of what it's been. So if it starts to lag away, then that conviction's really there. The buyers are going to, you know, buying begets buying. And that's what will happen if this thing starts to lag away. If you look over at the NDX, looks almost exactly the same. Same sort of scenario, pushing up, gets over the high, gaps up, gets over it. And this one actually had a swing point high. Higher prices. Russell, the small caps, same scenario. Right? Legging higher, gets over the high, breaks a high. Now, these are only highs on one time frame. It's not like you got multiple time frames involved here. So, yes, they're over the highs. Yes, they can push higher. Yeah, it looks like the SPX is going to test again tomorrow. And it kind of looks like all of them are going to force the Dow to go up there and hit the highs too, at least, if not get over them. So, indexes, all positive. Really nothing negative there. If I flip over and go over to the world markets, and I start with Taipei. Taipei is trying to, you know, it came back, did the retest, now it's regenerating. I didn't show it on all the other charts, but all of them have ABCD structures in place. Taipei's ABCD structure starts from here back to there, so you can see if it gets over the high, it can leg up quite a bit too. That's set up in all of them. Volume coming in, this one's going to go try to test the high. If we look at Nikkei, and these were the strongest two. Nikkei came down deep, right? It did not hold the retest regen zone. When you don't hold it, that typically sets up some sort of a range trade instead of a breakout type trade. So the retest regen zone was here, it got underneath it. Now it's coming back up, it's right at the top. Given the strength everywhere else, I suspect it's going to go back up anyway and get back up into the top of this bar, which is here, and potentially even get up to into this range. And I suspect you're going to see up here a resistance zone draw tomorrow. That push, right, will probably still be in this big range, and if I clean this up and draw it for you, the range is going to be up here. The one below it was down there. So you're probably going to get into the top range, work your way up into this area up here, maybe get back to the top, maybe make a new nominal high or not, I don't know, but it does look like it's going to get into the higher range, but it's probably a range trade now. It's probably not a breakout trade, and that's because it didn't hold the retest regenerate. Let's go look at the weaker ones in Asia. The Hong Kong, I can't bring up Shanghai anymore, they don't provide volumes, so I can't get the volumes on. Hong Kong is probably going to test up and try to get into this gap area. You know, given the strength everywhere else, this will probably try to get into this gap area tonight and see what it can do with it. You know, the real test would be up here if it can get up there, but first it has to get over the gap. So we'll see if it can get over the gap to start with. If I go over to not Asia, but back to Europe. The weakness in Europe has been the French market. Well, the French market got over 2 swing point highs today. So breaks of multiple swing points on a single time frame, that projects this thing's going to try to get to the highs, right? And if it can break these, right, that's a whole different story. So far, this has been the weakest one, but now this is a huge ABCD structure if it can actually do something with it, right? Could take it much higher. And that's despite the fact that these guys' economics look like, shall I say, crap. It doesn't matter, right? When momentum gets going, people start chasing money, they can ignore all the fundamentals. That's why fundamentals have such a hard time on upside and downside, because you know the momentum has nothing to do with the fundamentals. The DAX, if you remember, made new highs on the last push when the CAC was struggling. Today pops over, new highs, legging up, another ABCD structure to the top side. So we've got a lot of ABCD structures in place now. What you want to see if you're playing these is you want to see them leg away. So you get your pullback. This is a shallow one. You get your pullback. You want to see this thing leg away and push up, right? Because then that gives you the confidence that that structure really is for real and that it's going to try to reach it. And let me look at the FTSE. I didn't look at the FTSE yet. I had a great article from a member subscriber out of Australia that sent me a piece on the FTSE, the history of it, and why it's kind of a it's not as broad an index as you would like, right? And the reason for it, again, ABCD structures here, it's trying to get over the highs. So that one looks to try to press higher too. The reason for it was that you know, the mining companies have a large presence in London. They just happen to be listed there. You know, it's not as if that's where they do business. It's just where they listed, and that was because of London being the major financial center many years back when all these guys were starting to list. So it was kind of an interesting piece. It's on the front page of TA Today up in that slider area if you want to read it. It's kind of an interesting one. So anyway, overseas markets look just like us. Want to press higher, right? ABCD structure's falling into place now. Everything's happening. There's nothing that you can see that looks as if it's a problem. And what we always try to do when we're looking at these things is find the problems. Go into the sectors. Transports, no problem, over the high. Semiconductors, stretching away, although you know, Intel will be the big number tomorrow. I doubt these go any farther tomorrow. It will be up to Intel now. XLB, and that ABCD structure was there. There's ABCD structures everywhere you look. Most haven't actualized in the sectors yet. They have on the indexes. Well, they have on 3 of the 5. ABCD structure potential here, legging back to the high. XLB. XLE, this is the one that's struggling. And this was with all up $2 today. Still can't get anything going, right? That one's hurting. Financials, they get over the high. They actualize their ABCD structure over the highs. So now you've got a structure here. Let's find it. It's from there to there. So that one presses, right? So that can leg another 2-3%. All of them set up. Volume expands over the highs. XLI almost over the highs. XLK, well, here's the XLI almost over the highs. Going to attack it tomorrow. XLK gets over the highs, right? Legs away on a breakout. So another ABCD structure there. Now this one's almost done. This is kind of interesting. So what is the low here? Let's just ballpark it. 34. That's about $1.70. 35, 36.50 closes at 36. Excuse me, 35.96 was the high. So it's only about 50 cents away. That's still another 1.5%. The only one out here that even begins to hint of some sort of an issue, and I brought this up a couple days ago, and I was talking about it, because was it yesterday or the day before? I think it was yesterday. I think it was the day before. I think it was Monday. They said that no, it was yesterday. Yesterday they were talking about. I brought it up last night. Yesterday they were talking about. The consumer discretionary, the retail sales numbers come out, and that was the reason the market went up so much yesterday. And last night I told you, well, that's a bunch of bunk because that was one of the weaker sectors. I mean, it couldn't even get going. Well, look at it today, right? Goes up into the top of this bar, right? Fails into resistance. Everybody else legging higher. This one can't. So what does that tell you? Is that some sort of is it a red herring? Is it not real? Is it just, this guy has his own particular problems? Well, I did some work and started looking through some of these, and some of these have issues. A couple of my own, which made me more interested. But you've had some terrible hits in here, like Bed Bath & Beyond reported last week. This thing got demolished. Right? It's not the first time this thing's been demolished. It's been demolished before, and that's the sort of thing that when you look at this, I mean, here was one back here that happened. It was the same scenario, right? They can't hit their numbers, right? But look at this market. It takes stocks up that can't even hit their numbers, right? IBM's the same way. Look at IBM, and this is not in this sector, but this stock has missed 7 quarters straight its earnings, yet it's still hanging up here within 2% of its highs, right? I mean, what's up with that? It's got nothing to do with fundamentals, or it wouldn't be up there. But if you go back, to the discretionary, there are some that are doing quite well, but there's a bunch of them. Here's Abercrombie Fitch, right? You got a big bounce, but what is it? It's going into resistance, hanging at the lows. This thing had already broken down, and you can go right across the board. There's many of these in the same boat. They can't get going, and if this economy is doing so well, then why aren't the consumers spending? Why is the discretionary money not there? That doesn't make sense. So something's a little awkward. And today I was telling members and subscribers that, even though we're breaking out, it just doesn't feel right. Something feels wrong. Maybe this is what it is. I don't know what it is. Today I was searching to try to understand why I wasn't as enthused as everybody else seems to be that this market can go up forever. But anyway, whatever that means, I'm not sure. I guess I'm rambling a little bit here, but this is the one sector that seems to have problems. Everybody else seems to, well, this and energy. I mean, it's the same thing. I mean, we look at USO. Okay, USO pops $2 today. Now, mining has been beat up pretty bad, but it pops up huge and XLE can't even move. And I don't know how to answer that one either. Let's go look at the ox markets. This is one of them, of course, but let's take a look at the rest of them real quick. So USO, big pop up, didn't help that sector. I'm curious, what does ExxonMobil look like in here? Drifting down. It's going to find support pretty soon. How about what are the other ones? CVX is the other big one. Let's see what that one looks like. Wow. Well, this is the one that's causing the problems. You're down here testing lows while the market's testing highs on one of your big integrated oils. How about ConocoPhillips, the other large one? Same thing. This is ABCD structure to the downside. Something is awry. Don't know what it is, but it's awry. Okay, let's pop through these. Let's start with the FXE. I saw it was down today about 0.5%. It had been testing and finally gave it up. Volume expands. Still sort of a range trade though, but this does look like it wants to come back in. Let's see what the dollar did. The dollar was up today. I know that the Aussie was down, the FXE was down. The dollar couldn't get over the top, doesn't have the volume yet, so the dollar's not telling us much. UNG I saw had a big pop today as well. I know that there were some subscribers asking about this guy. Yeah, that was boy, this is a hard market to trade. Anybody trading this has got to have some guts, because you didn't even get a good signal to get into this, and then you pop up. And today, it looked like it was strong, and it actually closed down. So it was strong most of the day. Maybe it was just because the oil market was up as much as it was. This looks like it's failing here. You're going to come back, try to close that gap. Silver and gold. It was interesting today because the stocks themselves started to turn long before the metals did. This one finished slightly down. This is silver. It's going to go back and try to test that high. Let's look at gold itself. Gold also was down and then reversed around and came almost back and barely held the gap. They tried to bring it down, couldn't. In the gold stocks, as I said, these guys flipped around. They were down pretty big this morning. They flipped around, they came back and actually closed up. So something good happening in this part of the world. Why? Again, I can't explain it. Is it because they were down so much last year? People just think they're the go-to trade to start the year? There's an ABCD structure here that was in place. Looks like it's just about played out. A little bit more to go maybe up into this bar. The real test here will be, what does it do when it does the retest regen? So when they get up there, that will be the test. Let me look at bonds. Bonds came back a little bit today, but they bottom at the end of the day. So you had this big bar up, you came into it, you got into it, and you actually closed 104.54, almost over it. That's actually pretty positive looking, the way that traded. Let me see what the shorter end of the curve is doing. So here's 7 to 10s. Excuse me. Not as healthy. And let's go to the shorter end. I assume they're going to be even less healthy. This is the 3 to 7s. Yeah, they are. So the longer end of the curve is actually finding buyers, while the shorter end isn't. The 7 to 10s is what everybody watches. And if you start seeing these guys, and what I mean by everybody watches it, this is where you see, the 3% number on the rates. If this starts to crack again, and those 3% number or 3% rates start coming back in effect, people are going to start squawking about it again. Let me see what junk bonds are doing, then let me take a few questions. So over the top, boy, Never any wrong in this market, is it? Okay, so what do we got over here? Federico, good evening. Good evening, sir. And you like my music? Yeah, I thought I'd change it up a little bit. Still John, but you know, him and his sax on a different tune. STE traded over yesterday's bar, closed under it with lower volume. I want to buy it. What do you think about it? Well, let's see what STE looks like. So Steris, boy, I had no volume. Okay, as I've been saying before, please check your earnings dates and see when they're going to report, right? Because you need to be aware of that if you're going to buy anything in earnings period. So I flipped over to look at the weekly. That still looks fine. So really the daily is where you want to be focused. And what did you say you want to buy? What bar? 1220 bar? Which is this bar probably? Yeah. Yeah, well, that's not a bad spot if it gets back there. Yeah, I just don't know that you're going to see it anytime soon. This to me looks like it's going to do an ABCD up and not allow that. I mean, right now it's focused on trying to do an ABCD structure up. So, you know, the price is going to go up there if it does it. And, you know, it's just barely, it's playing with it, right? So if it gets over it, and there was no volume today, you know, it should try to pull back a little bit tomorrow, but we're not extended or anything, so it's not like that's a 2-bar reversal or anything. Just looks like nobody was interested. You could actually, you know, it's kind of interesting here because you can always look at the trades different ways, right? And not the trades, but the candles. This low today, right, on no volume, actually tested back into this high, right, which has lots of volume. So one could actually argue that you tested, you know, trying to come back down and couldn't, you know, versus trying to go up and couldn't, right? So you could look at this either way. You know, this bar is a great bar if it comes back there, but I don't know if you're going to get it. Looks to me like this is going to try to leg. Okay. Wow, out of time. Did I spend that much time on stuff? Okay, so what do we got? We got breakouts everywhere. We got overseas markets that want to do the same. We got ABCD structures on the upside. We're going to test those upsides again tomorrow. We're going to see if we can break out on the SPX. If we do, that's probably going to leg a little bit while the Dow comes up and will be the last one to break. Dow's 100 points away. It's not that far. 100 points. We've done 100 points the last 2 days. So I mean, it's, you know, just another day, right? You don't have any more big news items this week other than the earnings. And if I pop over and look at those big numbers out of the earnings, let's quickly review that to see who's coming. So today, Bank of America popped real high, gave it up. After hours, CSX was down a couple percent. Fastenal was down 5%. That's a distribution wholesale thing. Tomorrow morning, Citigroup, American Express, United Health. Those are the big ones in the morning. They were all up big today. The other one's BlackRock. So those are the big four. After the hours, Intel. And then Friday you got General Electric and Schlumberger, which is in that oil sector. Those are the big ones. They're all going to hit tomorrow in the morning. You're going to have 4, and then you're going to have Intel after the evening bell. I think tomorrow we're going to see the SPX probably get over that high, and we'll see if there's really some stops up there or not. I kind of doubt it. This market just doesn't have the feel as if it's just going to leg away. Even with these gap up breakouts, it just doesn't have that feel to me. I'm not going to lean against it, but it's hard to put more money into it. If you're putting money into it, you had to put money into it when it was safe. Where was it safe? Well, it was safe on that down day. That's where we bought. Have a great night, folks. Take care of yourself. I'll see you next time. Until then, I'm L.A. Little. This is and was your daily TA wrap. Have a great night. Take care.